Market timing actually is a controversial uh, investment strategy. It's highly controversial. Controversial in the sense that nobody can accurately and consistently predict the outcome of stock prices in the markets. Nobody can adequately or can accurately do that. And we want to talk about the truth about market timing, a beginner's perspective. We want to really analyze the truth about this concept of market timing. You know. So, what exactly is market timing? A market timing involves attempting to predict future market movements by buying securities at their lowest price or lowest prices and sell them at their highest. The fact is that how do you determine the lowest price of securities? In the typical, charts, a typical stock market graph, how do you identify the bottom or the top, the trough and the peak? How can you accurately determine that? It's almost an exercise in futility. It's difficult to predict. Whosoever can accurately do that will certainly be very, very rich. So no one can do it consistently, you know. So it requires analyzing various factors such as economic indicators, stock trend, or geopolitical events to decide when to enter or exit the market. So is market timing a good strategy for beginners? That's the question. Is it good for you as a beginner? Well, we'll come to look at the answer in the course of this video. Please don't keep on watching. Let's see precisely how we could tackle this question. Is it very good is it a good strategy for beginners? Number one is challenges in market timing. Challenges in market timing. This has to do with complexity. Complexity. So predicting market movements is difficult even for seasoned investors due to the unpredictable nature of markets. And why are markets unpredictable? It's because human nature itself, is unpredictable. That is it. In the sense that given a particular event, let's say 100 investors are reacting to a particular event, they may end up reacting differently. Others may sell based on the same news, others may buy based on the same news. So it's difficult to really predict how human beings will react sometimes. So we equally have emotional bias. Apart from complexity, we have emotional bias. So beginners may be prone to emotional decisions leading to buying high and selling low. At the peak of the market, when euphoria sets in, when FOMO, fear of missing out sets in, people will pile into the market at the top with the belief that the price will keep on going higher, with the belief that trees grows to the sky, But unfortunately, the market will correct itself and they end up selling low, buying high and selling low. Then there's the high cost. High cost. Frequent trades may result in higher transaction fees and taxes, reducing your overall returns. You want to time the market? That will involve frequent trading. We are trading in and out of the markets, which would attract a sizable, level of commission fees. So, which will then drive your cost of trading, your cost of investments higher. Number two, risk for beginners. Risk for beginners. Number one is you have market opportunities, missed opportunities. So mistiming the market can lead to missing out on significant market rallies. You are just there. Should I buy? Should I not buy? And you're waiting for the right time to buy. While waiting, the market is going like this, So you miss out of significant market rallies because you want to time the market and enter at the right spot at the right time, which of course you don't know in particular. You're not very, very sure of the right time. You see the entire exercise here. So it's good to simply follow the company's fundamental and forget about the issue of when to buy or when not to buy or when to sell. Forget about timing the market. Then you have inconsistent returns. Few investors successfully time the market consistently over the long term. You may time the market and be successful, maybe within a short, maybe in the short term, right? But as a long-term investor, you cannot consistently time the market. Maybe you'll be lucky. You time the market once and you made it, but be rest assured to the fact that it will not continue like that forever. It will not. You cannot do it consistently. Number 3, better alternative for beginners. There are better alternatives for you as a beginner. So why do you attempt to time the market when you could have better alternatives we are about to discuss here? Number 1 is dollar cost averaging. Dollar cost averaging. Just invest a fixed amount regularly, irrespective of the market condition. Just say, okay, whether the market is up or down, I'm going to invest maybe $100 every month. When prices are high, you invest. When prices are low, you invest. As long as the fundamentals are okay, just keep on investing. So that will reduce the impact of volatility on your portfolio. And you end up buying at an overall, lower price. Then you adopt a buy and hold strategy. Instead of timing the market, adopt what is called the buy and hold strategy. All right. So invest in a well-researched asset or stocks and hold them, for the long term to have that benefit of compounding. You will get to benefit from your investment compounding over time. And then you consider diversification. You spread investment across asset classes to manage, risk effectively. You spread your investment across different asset classes, maybe across different industries, across different sectors, and as well as across geographies. That will help you to mitigate, sector-specific or investment-specific risk. So market timing is not recommended for beginners due to its complexity. It has high risk, and the discipline required to execute it successfully is, a newcomer, a beginner may not have that level of discipline. And so beginners should focus on simpler time-tested strategies like dollar cost averaging, like buying and holding for the long term, which aligns with one's long-term financial goals. So please, as a beginner, don't try to time the market. You will not get it. Even if by luck you get it right and it works, it worked for you, it will not work forever. Next time you end up buying high and selling low. Please follow time-tested buy and hold strategy.